Today is the 29th of October 2023 and I'm going to be making my weekly prediction for SPY. As usual, we'll be going over the monthly, weekly, and finally the daily charts, and then switching over to the Excel sheet where we'll go over last week's prediction and any trade that was made and this week's prediction in more detail. But before getting into this video, it's important to make the disclaimer that all information is completely educational and therefore it's important to conduct your own analysis before entering the market in order to avoid any unnecessary losses. Now that we've covered the disclaimer, let's get into this video. So first we'll start off with the monthly charts. Well, we can clearly see that similar to last time, we had this break of the trend line. But this candle here, of course, we can't predict on the current monthly candle because it hasn't closed yet, but we can clearly see that it's gone significantly farther down than last week, showing that even after the reports, the market continued to go downwards, and there's a strong bullish conviction. We can see that already for this month, the volume is higher than the last 2 months. So that's also a good signal as the volume is confirming this. We can see that the RSI has crossed this average from above, which gives us another bearish signal. So from the monthly charts, we're getting only bearish signals so far. We can see that it's also broken this support, and it's on the way to break this next support of 403.81, which we'll cover when we get into the weekly and daily charts. Speaking of, let's move over to the weekly charts. We can see that last week we had an extremely large-bodied red candle because of the reports. And although the candle isn't as large-bodied as last week, it is still huge. We can see that there's a strong bullish conviction, and the volume bars are very high and pretty much identical. And they're much more than last 2 weeks instead, in fact. So we have confirmation from the volume. We can also see that this support was broken, another bearish signal. However, there is something important to keep in mind, that the Fed interest rate decision and the FOMC statement is happening this week, so the markets are going to be very volatile. Speaking of volatility, the VIX is also very high, which is, again, and it tends to be supporting bearish movements. But because of these events, it's important that we're a little bit more conservative this week. We can see that the RSI is continuing to go downwards along with its average, giving us confirmation of this price action. So far from the monthly and weekly charts, we have only bearish signals. And based off of this, we can immediately assume that our range needs to be higher than last week's because of these events. It is very likely that the market will breach these supports or resistances. However, just in order to avoid whipsaws, it's important that we have them. So the support we're going with is 403.81, which is this long-standing support, and the resistance we're going with is 418.18. We can see that the current spot price is evenly spaced between the two. So whichever direction the market goes in, there's plenty of space, and so we can avoid any unnecessary whipsaws. And it's better to be safe this week than lose any money. So let's head over to the daily charts, where we can see this mentioned price action in more detail. We can see that here we had 2 spinning top candles, well, 1 high wave candle and 1 spinning top candle, followed by 3 large bodied candles. So not 3 black crows, but something of the sort. We can see 3 black crows here, which is a bearish signal. Then we had a minor stop in the momentum, if you will, and then 3 strong red bodied candles again. So again, we just have this bearish confirmation. And if we zoom out here, we can see the volumes of these candles at 107 million, then we have 115 million and 94 million, which are all 3 extremely high volumes. We can see them in the price chart if we zoom out, that they're much higher than the 2 candles which were green. So we have confirmation from the price movement, the price volume, that the market has a bearish sentiment so far, and the RSI is continuing to go downwards. So technically, we have complete bearish signals. However, we have to consider the market events and be a little bit safer this week by having a broader support and resistance. So let's switch over to the Excel sheet where we can see some of this prediction in more detail. But before doing that, we'll review last week's prediction, where we had a sell signal on the 26th of October with the entry price at 416.45 and a quantity of 257, giving us a total market exposure of 107,027.65, and the exit price was 412.29. We made a total of $1,069.12 in profit, and our current closing balance is 108,362.42. And as for this week, again, we have no trade yet. We wait for the breakout, and we buy when it crosses the resistance at 418.18, and we sell when it falls below the support at 403.81 with a target of 1% and a trailing stop loss. If the target or stop loss is not hit and we're in a position, we close on the closing price on Friday. The max OI from the monthly expiry this week is 440 for CE, so the same as last week, at 85,229, and 400 for PE at 197,777, and the monthly PCR is 2.07. The max Y for the weekly expiry is 430 for CE and 410 for PE. But we can see that the weekly PCR is 2.40, and the quantity for the CE is 17,325, and for the PE is 81,751. The weekly trend currently is down, and the monthly trend is up. And these are subject to change as time passes. So this summarizes our prediction for the week, and I will see you either next week, and we'll review this week's prediction and make the next, or anytime between the week if there are any relevant changes to this prediction based on the market events. But as for now, thank you all for watching, and I'll see you next time.